Steve Crutchfield, CEO of Amex Options. What kind of volume are you seeing over at the exchange? Because volatility remains low as measured by the VIX.
We've certainly seen a lot of growth in options volume generally over the last couple of years. 2011, a record year for the options market overall, with volumes up about 17% from 2010. Volumes are off slightly this year, although coming from that very high level, we're still pretty pleased with where we're at. On the Amex exchange specifically, we've had a lot of growth as well. We were at about 6% market share as recently as at the end of 2009. Now we're hitting at around 15, 16%.
Is there a sector which is getting a lot of the action?
The sectors that have seen a lot of action really have been the sectors where the kind of the stocks of the moment have been. Certainly a lot of volume in names like Apple, for example, lately. Also the ETF options such as SPY, IWM, and some of the related products there.
Is there anything that an individual investor can glean when you see a lot of options action in a name like Apple or another tech stock?
Absolutely. Well, certainly the options action in the name tends to be centered around news events, corporate earnings, things of that nature. Also names where there's a lot of thought that there might be news in the future. But we certainly like to position with some of the very liquid ETF options like SPY, the alternative, or the opportunity rather, to purchase a protective put against a portfolio, do a covered call right against an overall market position, some of the market-wide strategies that are available in those names.
Are you seeing a lot of retail action, retail investors getting involved? Because that's a sign of a bull market. When you see the little guy get in there and start playing stocks and options, that should be good news.
Certainly, and we continue to see a lot of retail involvement in the options product. Something like 40% of our volume overall does come from the customer side. We look to see that number grow in the future, of course, because we believe a lot of retail investors not quite using the options product yet to the extent that they can. And certainly an environment where we're in now, as you mentioned, the VIX being rather low. Volatility lower in the market presents an opportunity to do, for example, a call right to try to increase the returns on a portfolio.
And for example, buying puts is a safer way to play it than going out and shorting stocks because your losses would be infinite.
Absolutely, and particularly in stocks where it may be more difficult to put on a short position, buying a put can be a good way to get that market exposure.
All right, finally, before I let you go, how would the Volcker Rule affect options players and what you do over at the exchange?
So the Volcker Rule is something that we're looking at very carefully because a large proportion, something like 40 to 50% of options liquidity on our exchange is provided by some of those banking entities. Certainly, if they choose to back away as a result of restrictions on their market-making activity, we would expect to see other players step in. But we do believe that some of the requirements of the Volcker Rule that reduce the ability of banks to provide liquidity are something that should be looked at carefully because that could end up increasing the cost for retail investors who want to take the other sides of those trades.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to